Is the stock market one big giant scam that sucks up our money and takes it away? That's what we're talking about here today, guys. So many people, I find every time the markets get bad, every time the markets have weakness, I find a lot of people see comments in the comment section, the stock market's a scam, don't invest in the stock market, things like that. And as someone that's been in the stock market now for 10 years, I've seen a lot of people come and I've seen a lot of people go in this game. And I kind of want to share my perspective on this, kind of give you the four things from my perspective. It is so much more complicated than the stock market's a scam or the stock market isn't a scam. It's so much more complicated than that. There are some truths to that and there are some false things about that, right? And something I think is very interesting is it seems like every time the stock market gets weak, I'll see people, saying things like the stock market's a scam, don't invest in the stock market. I remember when I first started in the stock market, looking into it in 2008 and actually started buying stocks in 2009, a lot of people told me don't invest in the stock market. It's a big scam. Look at how much it's gone down. People have lost X amount of money, things like that. And I heard all that type of stuff. And every time the market's bad, every time the market's weak, you hear that. But when the market's going up and up and up and up and up, you don't tend to hear so much of that. So I just thought that's very interesting. So I want to go through all 4 points. I hope you guys enjoy this as always. Hit a thumbs up, leave me a comment down there, and let's get into this. Point number 1 I want to make about this whole is the stock market a scam? Do one very, very simple thing, okay? One very simple thing. Buy an index fund and don't touch that money. Don't worry about that money for 20, 30, 40 years down the road. And what you will find is that you made a massive profit on your money. You took $1,000 and you put into an index fund, $10,000, $100,000. You just simply put into an index fund, something that just tracks the S&P 500. And what you will find is you will have made a great profit over a 20, 30, 40 year span, a massive profit. You can go back any time period over the last 100 plus years and you will have find that if you bought an index fund at any time, even at times when the market was peaking, over a 20, 30, 40 year span, you would have still have made a massive, massive profit on your money, even at times when the market had seemed like it had peaked or something like that, okay? It is a very, very simple game. Warren Buffett did a great presentation at his last annual conference that it basically does with Berkshire Hathaway. Warren Buffett, what he went ahead and did, he said he bought his first stock in 1942. That was a long, long time ago. Warren Buffett's like nearly 90 years old now, right? He bought his first stock in 1942. He said, here's a real simple thing. If you had $10,000 saved away in 1942 and you just bought an index fund and you never touched that money, you never worried about what was going on, you just put that money in an index fund in the stock market, something that tracked the S&P 500 or the Dow 30 or something like that, that $10,000 in today's dollars would be worth well over $50 million. 10,000 into well over 50 million from the time Warren Buffett bought his first stock till now. And think about all the drama that happened. World War II was going on. You had the Cuban Missile Crisis. You had, the Civil Rights Movement. You had the Kennedy assassination. You had tons of different stock market crashes. 1987. You had the Great Recession of 2008. You had, just a year or two ago, remember the North Korea versus Trump thing, and it was like, oh my gosh, could we have nukes going all over the place? You could think about a million different dramatic things that have happened over that time period, and $10,000 would have turned into over 51 million. And think about how petty the things are we worry about nowadays compared to those big monumental things that have happened in the past. It's a very, very simple game. If you remember anything from this video other than this one point, buy an index fund, stick the money in there, 20, 30, 40 years, you're going to make a massive profit. Let's get into number 2. Point number 2 I want to make about is the stock market a scam is that some people try to pick individual stocks, which is what I do, and that's what I love to do. I love researching companies. I love picking individual stocks and trying to outperform the markets overall, okay? And a lot of people like to try to do that, and a lot of people fail, and so they feel like the stock market's a scam. Well, here's the facts, okay? The 3 main reasons people fail at picking stocks and why they either underperform the markets for, year after year, which everybody can underperform the market in a short period of time. But people that might actually pick stocks might underperform over a 10 or 20 year span because they're not doing 3 things, or they might actually lose money. And here's what it is, okay? If you pick stocks, you better work your tail off. You better do major, major work. If you want to try to outperform the markets, you have to put in massive amounts of work. You have to fully understand companies. I see time after time, people buy into stocks. They do not fully fully understand, like they don't even fully understand the business model of how that company makes money, and they expect to outperform the stock market. They expect to outperform hedge fund managers or mutual fund managers or Warren Buffett or this guy or that guy. How would you expect to do that if you're not willing to put in massive amounts of work to research a company and fully understand all the competitive threats there, fully understand a company? If you don't have the work ethic to put in toward picking individual stocks, that's fine. You don't have to do that. Just buy an index fund. You can still profit plenty of money buying an index fund, as we just talked about in point 1. But if you want to actually have the audacity to try to outperform the markets, pick your own investments, take your financial life in your own hands, that is great. But you better understand you got to put in work. Nothing in this world comes without a lot of work. You must understand that, unless you have rich parents that you inherited a bunch of money from, okay? You've got to put in major work toward anything in life. Number 2, you got to focus long term. So many times I get people that will buy a stock, then they're trying to be a long-term investor, and they'll trade out of that stock constantly or something like that. Or they worry, oh my gosh, did you hear the big news on CNBC today or Bloomberg? Oh my gosh, they said such and such. This guy came on and said, oh my gosh, the market's going down or something. I need to sell out my stocks. If you're in this game, and you're especially if you're trying to be a value investor, you better focus long term and quit trying to worry about all the short term stuff. It might be fun to talk about, but the difference is when it goes from fun to talk about to you're actually making investment decisions based upon short term stuff that might be going on or might not be going on. That's when you get yourself into a lot of trouble and you have to take massive losses. And the number 3 thing is you've got to stay disciplined in this game. It's a great thing if you have the right strategy. Okay, you can. Warren Buffett could tutor somebody up, okay? Warren Buffett, arguably the greatest investor ever. He could take somebody one-on-one and tutor them and say, you need to do this, you need to look for stocks that have this and that. And most people, unfortunately, probably still wouldn't even be successful investors, probably still wouldn't even outperform the market or something like that because they just can't stay disciplined, okay? When I look at my 2 biggest failures in the stock market over the past, decade I've been in the market, the 2 that come up were both undisciplined moves. The first one I got involved with margin in 2015. I started margining out money, investing money that wasn't even mine, and I lost a ridiculous amount of money in a 6 to 9 month span. It was insane. I got super undisciplined. I knew not to do that. I got undisciplined, okay? And the second thing was there was a stock I bought as a spec stock named GoPro, and I ended up turning this into a massive investment even though they were losing money. And one of my things is I don't buy stocks that are losing money unless it's a spec stock. And you don't turn a spec stock, which is fine. Everybody can buy one spec stock. It's a small part of your portfolio or something. You don't go ahead and turn that into a massive investment and one of your biggest investments. And I went ahead and did that. So if I look at my 2 biggest disappointments I've had in the stock market, both of them were because I got undisciplined, okay? And almost every single person that has not been successful at picking stocks, they fall into one of these 3 categories. They don't stay disciplined and they make, big mistakes, or they don't focus long term. They get too caught up in whatever's going on in the short term, or they just honestly don't have the work ethic. And that's fine. Like that's one's easiest. You don't have the work ethic. You don't have the passion for actually, researching companies, listening to conference calls. Like just put your money in an index fund. That's fine. Point number 3 I want to make is actually 2 different parts. The first part is trying to time the market out. The second part is letting someone steal your shares, okay? Let's talk about timing the market out. This is what I see a lot. People are like, oh, I'm going to buy right at the bottom. Oh, I haven't bought stocks yet. I'm going to let it fall all the way down or something like that. I've heard this consistently for pretty much all 10 years I've been in the stock market. I'm not buying in yet because I feel like something might happen in the market and I can get shares for a lot lower. I'm going to try to time out the market. Most people never even end up buying stocks in the first place. They like to say they're going to time out the market. They never do a thing, okay? Let's be completely honest about that. But you have other people that literally think they can time out the market. They can buy and sell all their portfolio all at once and just perfectly time out things. Let's be honest about this. If Warren Buffett can't do this, if unbelievably successful investors can't do this, how do you expect to perfectly time out the market? No one has ever in the history of mankind timed out the market perfectly over the long term, okay? Maybe some people have gotten lucky here and there. Maybe they felt like, oh, a recession was going to come and they happen to sell off all their stocks and go short or something like that. It's never happened in the history of mankind where somebody consistently over time timed out the market perfect, got out of the stocks at the perfect time, bought in at the perfect time. It's never happened in history. Maybe it could happen. It's very unrealistic. Like you have a better chance of winning the Powerball like 10 times in your lifetime than perfectly timing out the market. It is so unrealistic. It's not even funny, okay? And the second part of this is you let someone steal your shares. There were retirees and just different people that were selling off their stocks in 2008, 2009 at near the lows of the stock market because they felt like it might get worse and the stocks might go down a lot more. They let people steal their shares, literally. They sold out of their entire portfolios. They sold all their stocks, figuring, oh, you know what, it might get worse, basically trying to time things out. They let people steal their shares at the end of the day, okay? Remember, every time you go to sell a stock, there's somebody on the other side that's buying that stock, right? A lot of people have sold Warren Buffett stocks countless times over the last, 50, 60 plus years that he's gladly bought up and he made ridiculous profits on, and they let him steal those shares from them, okay? And they voluntarily sold those shares off. They voluntarily sold off their portfolios because they thought maybe it could get even worse, and they are way behind the times. They sell off a portfolio, and guess what? Somebody just got to steal those shares. This is what Wall Street loves, okay? There's a great expression about the stock market. The stock market is a place that transfers wealth. It transfers wealth from the impatient to the patient. It's as simple as that. It's a transfer of wealth from people that are very impatient to people that are patient. That's the bottom line in this game. So remember, you sell off all your portfolio because you feel like it might go down. You're basically just voluntarily letting someone steal your shares, okay? I remember back on Friday when the market, went on that massive dip on December, basically the day before Christmas or whatever, or that was actually Monday. I got a lot of comments from people either on YouTube or in my private stock market membership group that they completely sold out of their portfolios. Well, here now, the market's dramatically higher than where it was. I mean, the Dow's probably up 1,500 points since where it was at, basically, where it dropped out at the lows that day. Now, hopefully, things get much, much worse and they can say, oh, they were geniuses for selling out. But unfortunately, most times people do that. They never even are able to buy back in. A lot of people that were selling in 2008, 2009, they didn't start buying back in until like 2012 because that's when they felt like the economy was actually getting decent again and they could buy back stocks again. And that's just not the way to play this, guys, because guess what happened? The stock market went up dramatically from its lows in March of 2009 over the next 2-3 years. And by the time people got back in, the markets were already very much elevated and they had missed a ridiculous profit, okay? That's what ends up happening. Don't try to time out the market. Don't let someone steal your shares. If you own great shares in a great company that you believe in a ton over the long term, don't let someone steal those shares just because they might go lower, because guess what? They also might go a lot higher, especially if you believe in that company a lot over the long term. That's the bottom line. Let's get to point number 4. Point number 4 I want to make is if you buy stocks without any care to what the valuation of that stock is, you will get 100% scammed, okay? You can maybe get lucky a few times by just basically buying a stock and hoping it goes up over time. You love, a stock ABC, so you buy stock A, B, and C without even looking at the valuation, without caring what the PE's at, the forward P's at, any of that type of stuff, what the revenue growth is, what the profit growth is. You buy this stock, okay? You might get lucky once or twice where like Vegas, you can maybe hit it once or twice, but guess what? If you don't care about valuations, you're not paying attention to valuations, you're gonna get scammed, okay? Let's say I went down to a store that sells Levi jeans, and Levi jeans at that store sell for $500. And I'm like, oh, I don't care about valuation. I like Levi jeans. I'm gonna buy this pair of Levi jeans. Guess what? In the end, you could say I was scammed for buying Levi jeans for $500 when you can go at basically any store out there and buy Levi's for less than $50, right? I could say, oh, I really love those Levi's. Yeah, I really love them. But guess what? I got scammed in the end because any other store sells them for $50 or less, okay? That's the bottom line. If you're gonna just buy stocks without looking at valuations, you're gonna get scammed a lot in this game, and that's just the way it is, because in the stock market, what you have is you're going to have a massive amount of stocks that are undervalued at any particular time. You have a ton of stocks that are way overvalued at any particular time, and you're going to have a fair amount of stocks that are at a fair valuation that's, fair to buy in, okay? That's a stock market consistently throughout time. Sometimes there are more stocks overvalued than undervalued. Sometimes there are way more stocks undervalued than overvalued, and that's just the way it is. But if you're just buying stocks because you like a stock, guess what? You're going to get scammed in this game, because sometimes you're going to get into a stock that's way overvalued. That stock's going to fall dramatically. You're going to sell for a massive loss or hold a position that's down, 50, 60, 70% or something like that. It happens with IPOs all the time. People get really hyped on an IPO. They love some company or some service that came out, and they buy into this IPO, and we could go, across a million different companies, like the GoPros, the Fitbits, the Snapchats. We could go across a million different companies that IPO'd, somebody loved their product or service, and they just fell like a rocket ship, down 90% from their highs, right after the IPOs or something like that, okay? So the stock market can be a scam place. It also can be a place where you can build up massive amounts of wealth. The question is, what are you doing? If you want to buy individual stocks, you better have work ethic, you better have discipline, and you better focus long term. And if you don't, just buy an index fund. 20, 30, 40, 50 years down the road, you're going to make a massive profit. You won't have had to worry about anything. It just depends on how you want to play this game. It can be a scam place, or it can be a place where you build a lot of wealth over time. It depends on how you treat it. Anyways, hope you guys enjoy this. Hit a thumbs up if you did. Thank you for watching and have a great day. Share this with somebody you care about.